Hello, welcome back to my channel. If you're new here, my name is Unwana, and every week I try to share content on things that I'm implementing in my life and strategies that you can implement in your life to improve your personal finance if you're into investing and business. So thank you very much for being here. And as usual, please don't forget to subscribe to my channel, hit the notification bell, and also give me a thumbs up for this video if you find this useful, and also share it with your friends and family. So my topic today is home equity lines versus home equity loans. Right now is a great time for anyone who's interested in trying to reduce their interest payments on their mortgages, on their loans. So interest rates are pretty much very low right now. So this is a very interesting times. If you're looking to refinance, would be a great thing. So a little disclaimer here: I am not a professional mortgage broker. I do have an MLS from my job because I work in the financial industry. I'm a banker by trade, my full-time job. So I do have an NMLS number. However, one of my subscribers was asking for this video because they're looking to take out a home equity line or home equity loan, so they're not sure which to go. So there are pros and cons with each. So this video is just to show you the differences between a home equity line and a home equity loan. So to begin with, if you have a home, if you have a mortgage, so obviously, and you also have some equity in your property, then you might be a prime candidate for home equity line or home equity loan. So it depends on what you're trying to accomplish. So let's start with the home equity line. So home equity line, you should look at the home equity line as a line of credit. So basically, you're taking a loan on your property, okay, on your residential property that you reside in. So with a home equity line, you take out a line on the equity you have in your property. So let's say your house is valued at, I'm gonna try and keep the math kind of simple here. So let's say your house is valued at $100,000, okay, and you owe, let's say, $40,000 on your mortgage, okay. So the equity you have in your house is, at this particular time, will be $60,000. However, most financial institutions won't give you the whole $60,000 line. So what they'll do is they'll take what your property is worth. So let's say your property is worth $100,000, and depending on what ratio your financial institution or your lender is going to use, for instance, your financial institution might use about 80% or maybe 90% of the value of your home as a base to start. So let's say your house is worth 100, we use 90% of that, so that's 90,000. We subtract what you owe on your property, which at this time is 40,000 that you have outstanding on your mortgage. So 90 minus 40, you have 50,000. So your financial institution will give you a home equity line for $50,000, which you can use to do whatever you want. However, with the home equity line, there is what's called the draw period. So most times the draw period might be your first 10 years, okay? You can draw off of that line. So let's say you need to buy a new central air conditioner for your house, or you want to pay for some medical expenses, or you want to pay for something, a major crisis or major emergency, okay? Buying a new car with your home equity line of credit is not a smart thing. However, you're free to do whatever you want with the money, okay? So now you have $50,000 available for you to write a check on to take care of any thing that you want to do. With the home equity line, you only pay for the portion of the line that you actually use. So let's say in this example, you have 50,000 home equity line of credit, okay, and you decide to spend $20,000 to fix the roof on your house. all right? So you will only pay interest on the $20,000 that you've spent to fix your roof. So like I said, the first 10 years of a home equity line, excuse me, is your draw period. Then the next 20 years is your payback period, where you have to pay back interest and principal. So what most people do is, if you take out a home equity line, okay, and you use it, you pay it back, and if you want, you can also pay down the principal as well. So that way you have that line available again. So let's say you borrowed $20,000 from your home equity line of $50,000, so you still have $30,000 left, and then you pay down the $20,000. Now you're back up to $50,000 home equity line available again. Okay, so that's for the first 10 years. You can keep cycling and, you know, taking money out, paying it down, take money out, pay it down, take money out, pay it down. So it's almost like having a credit card with a credit limit. So let's say your limit is $50,000, but you keep charging, let's say $10,000, $5,000. You pay it off. Actually, you pay it down. You don't pay it off and close it, but you pay it down to zero. Then you have that $50,000 available again for you to use. Okay, so the interest rates on home equity lines right now are pretty cheap. Okay, they're very low because of what's going on with the economy, with the health crisis we have going on. The government's trying to stimulate the economy, so interest rates have been kept artificially low right now. So that's, in a nutshell, what a home equity line is. Okay, but you're also still pledging your property as collateral for the financial institution to offer you this line of credit. Now, on the flip side, let's look at the home equity loan. With a home equity loan, it's also similar calculations used to determine the home equity loan, but there are more guidelines and it's more stringent. Okay, so with the home equity loan, so the same scenario will happen, but at closing with the home equity loan, you get the full $50,000 check upfront at closing. However, your payments are due right away. So the following month, you'll be responsible for paying back the interest and principal payments on the loan. Whereas with the home equity line, you're only paying interest payments on the portion that you've used. So in that case, I told you, let's say you use $20,000 of your home equity line, okay, to fix your roof or to buy a new car. Okay, you're only responsible for the $20,000. You're not paying interest on the 50, but only on the 20. Okay, so but with the home equity loan, you're responsible for paying principal and interest payments on the 50. All right, so the beauty of having the home equity loan is your payments are fixed. So your payments on the home equity loan are fixed at a particular interest rate. So let's say your home equity loan, you're paying, let's say for example, maybe 2.75 or 3%. Okay, so your payments will be fixed because your interest is fixed on the loan. However, on the line, the interest on the home equity line of credit is tied to prime. So currently prime is low, so that's why, you know, most people probably do the home equity line. And also with the home equity line, there's the risk of your payments increasing in the future if interest rates rise. All right, so if you're sure that, you know, you'll be able to pay everything off before interest rates begin to creep up, then maybe a home equity line might make sense for you. However, for others that want to make sure that, okay, I just want a fixed payment every single month, you know, I don't want all these fluctuations or surprise increase in my payments, then a home equity loan would be the best option for you. So like I said, they both have pros and cons. The beauty of having a home equity line is that you have that line available. So let's say you took out a $50,000 home equity line, you use $10,000, okay, you still have $40,000 available, but you're only paying on the 10 that you used. Now, once you're done paying it down to zero, you now have your $50,000 available. So you have that amount available to you. However, with the home equity loan, once you get the check for the $50,000 and you spend it, that's it. there's no getting an extra 50,000 because it's a one-time payment. You're given a check for 50,000 at closing and then you're done. All right. So I hope this shed some light on the difference between a home equity line or home equity loan. I know we're going through some crazy times right now, and there are families out there struggling, and people are looking for options on how to cash out some equity from their property because everybody is cash strapped right now and looking for a way to do this. So whether you apply for a home equity line or a home equity loan, there are certain credit guidelines that you might have to qualify for in terms of your income, in terms of the value of your property, and your ability to be able to pay back and how much equity you have in your home. So there are different factors that the underwriter will look at to qualify you for either a line or a loan. So I hope this helps you. Like I said, I'm also in the financial industry. I work in a bank. So this is one area where I deal with all the time, and people are always asking, what's the difference between a home equity line of credit versus a home equity loan? So in a nutshell, this is it. So if you found this video useful, please subscribe to my channel, like this video, share this video with someone that you think might benefit from it. And I thank you so much for your time. And again, my name is Unwana, and every week I try to share interesting content that's helping people out there. And this was a question I got from a subscriber who sent me a message asking, should they apply for a home equity line or a home equity loan? So I hope this helps you out there. So thank you very much for your time, and please subscribe to my channel. Check out my other videos on other interesting topics, and I'll see you on my next video. Take care.